Hi there, welcome to Kneppy Invests. I'm on 5.5 weeks leave right now, so plenty of time to do videos, plenty of time to check all the December quarter Appendix 4Cs, all the February half-yearly and yearly reports. I've already started going through them, and to be honest with you, I've actually found quite a few I do like. Just looked at realestate.com's half-yearly, and it was actually really good. And the share price has pulled back a fair bit. I was, at one point in time, a long-term shareholder of realestate.com. I sold out because I thought the valuation got a little bit too frothy. But the share price pulling back is really interesting. And there is potential. I will take a position in PayPal, which would be my first international company in my portfolio. That is through my super. I've put an order in Net Wealth, and we'll see if that order goes through tonight. I do have an all-in buying price around $80 US dollars, and the current share price is 94. If it gets to 80, I'll put another bid in. But the share price of PayPal right now is at about a 3-year low. It's even lower than during the COVID-19 financial panic. I do think the market has completely overreacted to their quarterly results. And not only that, financially, when you look at some of the valuation metrics, actually does look attractive. Maybe I should do a video on PayPal. Who knows? Anyway, the whole focus of today's video is Tesserent. This is one of the favorite companies, maybe not the favorite companies, but a very favored company among retail investors on the ASX. And to be honest with you, just like PayPal, I do think Tesserent is attractively valued right now, particularly if they keep putting up the sort of quarters they released or had in the December quarter. Probably the only bad thing about Tesserent is there is still negative sentiment in the company's share price, and that has been leading to the share price falling. But when we have a look at the chart, I do have a buy-in price, and you might be surprised that the buying price is not lower than it is now. It's actually higher. And hopefully that will make sense when we look at the chart. So let's get into this video, looking at Tesserent, focusing on the December quarter results, their Appendix 4C. Tesserent is a cybersecurity and secure cloud services business. Now, they've been listed on the ASX since February 2016, a listing just after they were founded. And there was a long period of time, maybe about 3 years, where this company did nothing. In fact, share price fell by quite a bit, like from 20 cents down to about 4 cents. There was no growth in the business whatsoever, and you'll be able to see the lack of growth when we look at the cash receipts history. And more than likely, the management, the board decided they had to do something. And they decided their business plan would be to buy up cybersecurity companies, sort of like a roll-up model, just continuing acquiring, using or issuing shares, that sort of thing. And it has been successful in terms of growing the company when you just look at revenue. But when you look at the valuation of the company and whether that valuation of the company or this business model has created wealth or value for the shareholders is a completely different story, if that makes sense. So you can actually grow the company in terms of market cap, yet not create any value for shareholders. And I'll talk about that later in this video. In fact, my previous video on Tesserent, I did talk about that as well, and it will make perfect sense when I show you some numbers. Current CEO and sole CEO is Kurt Hansen. They did have co-CEOs, and that changed late in 2021, if I remember correctly. So now Kurt Hansen is the the only CEO. And one of the major shareholders is Jeff Lord. He's the founder and CEO of Belgravia, and he has an 8.2% holding in this company. Now, the current market of Tesserent at 16 cents, and that is a share price, last time I looked, on the 9th of March, is only $200 million. Now, this company is operational cash flow positive on a yearly basis when we look at the trailing 12 months. Operational cash flow positive in the last quarter, and not by a little amount, by a fair bit. So I do think there is potential value with Tesserent at these prices right now. And the ticker code is a fairly explosive one, TNT. Now, before I have a look at the December quarter Appendix 4C, now in this video, I'm not really going to focus much on the half yearly. I will look at it later in the video in about 2 slides, but the main focus of this video was looking at the Appendix 4Cs. And the reason I do like to look at Appendix 4Cs and the statement of cash flows is there's a lot more information in these statement of cash flows than what you'll find in the half yearly and yearly. That's why I like to look at these quarterly cash flow statements. So let's go back 1 year ago. I just want to see how this company has grown in terms of their receipts over the past year. Receipts to customers, 20.6 million, and they were operational cash flow negative by 1.3 million. And you'll notice that this company does do a lot of capital raisings. And one of the main reasons they do capital raisings is to acquire businesses. But one of the main disadvantages and problems about continually doing capital raisings is it is very dilutive to shareholders. And the shares on issue for Tesserent has increased tenfold over the last few years because of their roll-up model. Now, they began this particular quarter with $13.8 million of cash, finished with $17.9 million. And the main reason they burned through cash in this particular quarter was because they made an acquisition and spent $6.1 million of doing that acquisition. But they also received $3.5 million through the exercise of options. And that seems to be an ongoing thing for Tesserent because the same thing happened in their most recent December quarter. So let's have a look at that quarter to see how Tesserent has performed over the past year. Cash receipts have almost doubled from 1 year ago, increasing from 20 million to 37.8 million. That's an increase of $17.3 million in 1 year. And the most important thing here is looking at the increase in spending. We don't want to see their spending increasing at a greater rate than the increase in receipts and customers. So let's have a look at the 2 major expenditures for Tesserent, which is product manufacturing and operating costs. That was up 4.2 million from 1 year ago. And staff costs was up to 15 million. That was an increase of 6.9 million. But the main thing here is the increase in spending was not as great as the increase in receipts to customers. So the company in this particular quarter was operational cash flow positive by $4.2 million. Now, there are other things happening in cash flows from investing and what's the other one? Investing and financing activities. For instance, there were deferred settlements of $7.7 million. They made another acquisition, $13.1 million, and they had a capital raising, again diluting shareholders, and that capital raising raised $25 million. And because of all that sort of action in operating activities, financing activities, and investing activities, cash on hand grew from 8.1 million and finished the quarter with 13.6 million, but they also had $35 million of debt. So they're actually net debt by $22 million. Now let's have a look at the half-yearly information. And what I've done in this slide is not looking at the half-yearly numbers, but I'm looking at the trailing 12 months. So when we talk about revenue, 82.3 million, that's revenue over the last 12 months. It's not a half year. So it's looking at the last half of financial year 21 and the first half of financial year 22. And then we're comparing it to the trailing 12 months revenue 1 year ago. So revenue has increased from 44 million to 82 million, almost doubled. Gross margins have increased from 67% to 77%. Now, operating cash flow has significantly improved over the past year from being negative 4.4 to a positive $10 million. That's what gets me excited about Tesserent, the very fact that they are operational cash flow positive. They're still not profitable, loss-making 1 year ago by almost 10 million. That has improved and only loss-making by $1.8 million in the most recent or the trailing 12 months. As I mentioned before, they have $22 million of net debt. That has increased. But when you do look at some of their valuation metrics, it is starting to look quite attractive for Tesserent. Price to sales ratio 2.4, but the price to operating cash flow ratio is only 20.1. And you could view that as sort of the PE ratio, but not quite. It's a little bit different. But we are looking at the price and sort of an estimation of earnings. So it's not quite earnings, because earnings is profit. This is just operating cash flow. I prefer to look at operating cash flow over earnings, because earnings can be, won't say manipulated or more easily manipulated, but you can see fairly big jumps in profit or falls in profit based off one-offs. And I want to get rid of those one-offs. And that's why I do focus on operating cash flow, but then I'll also look at profit, also look at changes in working capital, that sort of thing. But when we do look at price operating cash flow, 20.1 does look quite attractive right now for this company. And that's why I'm quite intrigued with Tesserent at these current prices. A little bit of a red flag for me is their debt. They do have $35 million of debt. And even though, I think I always mention this when I do a video on Tesserent, even though we're in low interest rate environment, the debts or facilities that Tesserent do have fairly high interest rates on them. So 8.9% for one of those facilities and 8.5% for the other one. So this company, if they maintain debts of 35 or even increase those debts, will have to pay fairly high interest charges or interest payments. And that is definitely one negative factor when it comes to Tesserent. I don't like companies with this sort of debt, particularly if the interest rates on those debts are fairly high, and they are high for Tesserent. I've already mentioned that during the first 3 years that Tesserent was listed on the ASX, this company did nothing. There was no growth, and this is the cash receipts history from when they listed on the ASX. And the first quarter was the March quarter 2016. And from the March quarter 2016 to the June quarter 2019, receipts went sideways. Absolutely sideways, because the receipts in both those quarters was 1.3. So more than likely at some point, one of the boards or one of the management said, we have to make some changes, because our business model, our current business model, is not working. We are not growing. How do we grow their business? And I think they probably came to the conclusion the roll-up model will work for us. And you can see how that has been successful in terms of receipts growth. And this also works when you look at revenue. So receipts have grown from 1.3 million in the June quarter 2019 to 37.8 million in the most recent quarter. So significant growth in receipts over the past 3 years. But this has to translate to growth in profit and growth in operating cash flow. We're starting to see that in operating cash flow. The next step is to see it in free cash flow and profit. This is something I did in the recent video I did for Tesserent, maybe about 3 or 4 months ago. And the question is, has Tesserent created any value for shareholders, particularly those who bought into the IPO about 6 years ago, and the share price at IPO was 20 cents. The shares on issue at the IPO were 102 million. So that means the market cap of Tesserent at that point in time was 21 million. So if we just focus on the market cap of Tesserent, it's actually increased tenfold over the past 6 years, from 21 million to 200 million. But the other thing that has also increased tenfold is the shares on issue. Those have gone up from 102 million to 1 billion. And the reason shares on issue has increased is because they have made a massive amount of acquisitions, and they've issued shares due to capital raisings to fund those acquisitions. So even though the value of this company has increased by a significant amount, the share price has actually gone down from 20 cents to a current share price of 16 cents. So even though this is a much bigger company, the management have not created any value for the initial shareholders of this company back in 2016. Now let's have a look at the chart, and this is the daily chart, a fairly clean daily chart. It's just looking at the candlesticks and one support and resistance level at about 18.5 cents. So this goes back to June 2020. Share price at that point in time was less than 10 cents, around about 7 or 8 cents. And we saw a massive climb in the share price during the later period of 2020. If you remember back then, there was all these cybersecurity issues, and cybersecurity companies were all the rage back then. That's why the share price of this company went from about 5 cents all the way to a high of 44 cents in about 6 months. And that was a share price high for Tesserent. The share price has struggled since then. It's fallen to about 18.5 cents. in the middle of 2021, hit a support level and bounced off it, but then that support level was broken in around November of 2021. And so when support level is broken, it then becomes resistance. And we have seen the share price of Tesserent test that resistance level at 18.5 cents 3 times since it was broken in December, then again in January, and then recently, just a few weeks ago, we did see a share price rise fairly rapidly from about 13 cents to 18.5 cents, about 3 or 4 days of trading. Some good volume came in as well. Tested 18.5 cents, but it failed, and the share price has pulled back to 16 cents. So the share price is testing that resistance level. So a lot of things in technical analysis do work. Support and resistance levels do work a lot of the times. And so at this point in time, because that resistance level at 18.5 cents is a fairly strong one because it has been tested 3 times and it has not failed, if we do see 18.5 cents or the share price get above 18.5 cents on strength, particularly if there is good financial news released by the company, that would be ideal. That's the time you take a position in Tesserent. You don't take a position now and just wait for who knows how long, because the share price could do many things from here. The share price could go sideways for about a year, 2 years. So you could put your money to better use. Or the share price could fall even further. We just don't know. So I want to wait for a breakout in the share price. So I put this onto my watch list and I'm watching the share price constantly to see if we can break through that 18.5 cent barrier. And if we do that on strength, that's when I take a position in Tesserent. Of course, that is my particular strategy. You could have different strategies that work for you. Maybe you just like how this is valued right now. There's some good value there. 16 cents is good value for you, and you don't care how long you wait. You could wait 2 or 3 years before the share price breaks out. That could be your strategy. So there's all different strategies you can use that might work for you. So just because I've got a particular strategy, that may not work for you. So I think every single investor has to find the strategy that works for them, and then and only then will they become a successful investor. If you have any questions about Tesserent, maybe you completely think differently from me, maybe you think this is the worst company on the ASX, I'd love to hear your opinion, particularly if you have opinions that are counter to my own, because that's how we learn as investors. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.